The S&P 500 has fallen almost 10% from all-time highs at the beginning of the year and is currently hovering around correction territory. While it is painful to see your portfolio in red, your job as a trader is to take advantage of market conditions and implied volatility to make money in the stock market. One of my favorite strategies to generate income in the down market is selling cash secured puts. Hi, my name's Gautam. I'm a former finance executive turned options trader. My goal is to help you escape the 9 to 5 grind like I did with the power of options trading. A quick disclaimer before we get started. The information provided in this video is for educational and informational purposes only and should not be considered financial advice. I am not a licensed financial advisor. Now that we have that out of the way, let's look at the actual strategy. So let's try to understand what exactly are cash secured puts. A cash secured put is an option strategy where you sell a put option at a set price, also known as a strike price, for a set time. In return, you receive a premium for taking on this obligation. It is also known as a cash secured put because you need to have enough cash to cover the cost of buying the stock, if assigned. Now, let's look at some of the benefits of cash secured puts and why it makes an attractive strategy. Here are some benefits. The first one being income generation. You will make money as long as the stock price stays above the sold strike price and also benefit from theta decay as an option seller. Buying stocks at a discount. If the stock price falls below the strike price and the put is exercised, you get to buy your favorite stock at a discount. Let's talk about risk management. Your risk is limited to the cash you have set aside to buy the stock, making it a safer strategy compared to some of the other option strategies. Next, let's look at the steps you would take to execute this strategy. In the first step, you would choose a stock that has solid fundamentals and that you believe has long-term potential. Once you've decided which stock you want to choose, the next step is to determine a strike price and an expiration date for the put option. I recommend choosing a delta of 15 to 20 when selling puts. A lower delta means less premium, but also lower chances of getting assigned and vice versa. Remember, choose the strike price that you're comfortable at owning this stock if assigned. Step 3, ensure you have enough cash to cover the purchase if the option is exercised. And step 4, sell the put option and collect the premium. For step 5, once you've sold your put, you would monitor the position until expiration. Now let's do a live example on one of my favorite stocks, which is Nvidia. I have Nvidia pulled up here in Robinhood. And first thing we want to do is you want to select sell, put, then you want to choose the week where you want to sell the put. So today is March 19th. I'm going to go ahead and select the March 28th, which is 9 days from today, and come down and look at the options chain and look at some of these prices and see how much premium they're offering. Right now I have the 111 put selected, which is a 21 delta or 21-22 delta. It has good volume and open interest, meaning it's easy to get in and get out of the contract. There's another one down here, the 110 put, which is about a 17 delta. This also has good volume and interest. So I'm gonna go ahead with this 111 put, hit continue and review order and submit. And that's how you submit an order for your cash secured put. So now that we've done a real example, let's take a look at some of the consideration and risks for the strategy. While selling the cash secured puts can be profitable, it is essential to consider the following risks. If the stock price falls significantly, you might end up buying the stock at a higher price than the market value. The next risk, well, this is really not necessarily a risk, but you always have to make sure you have enough to cover the stock purchase in case the option is exercised and you're assigned the put. And last but not least, you want to steer clear of doing the strategy on meme stocks or other stocks with weak fundamentals to avoid bag holding stocks for a long time. To conclude, selling cash secured puts is a fantastic strategy to generate income and acquire stocks at a discount. Additionally, executing the strategy in a down market offers rich premiums than in a green market or up days. If you enjoyed this video, give it a thumbs up, subscribe to my channel, and hit the bell icon to stay updated with our latest content. Leave a comment below if you have any questions or if there's a topic you'd like me to cover next. Thanks for watching, and I'll see you in the next one.